Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on rare earth elements today. And we are going to hear from Ucore Rare Metals Chairman and CEO Pat Ryan. Now, during today's webinar, he will provide an overview and outlook. Then we'll take some questions. We'll get to as many questions as we can. Please enter them into the chat box. Now, before we kick things off, first we need to discuss the fine print. During this Ucore webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on pages 2 of the corporate presentation that can be found on the ucore.com website. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Ucore Rare Metals. So with that said, why don't I turn the floor over to Pat to speak about the company.
Hey, thanks for that introduction, David. We'll go through a slide deck here today, which is sort of a high level on our business plan with some very pointed messages that I believe put us in a first mover position. Of note here on the title slide, fighting climate change is certainly the biggest initiative we have in the 21st century. Energy transitions upon us, and decarbonizing is certainly key. And to do that, to decarbonize, you've got to look at your most energy intense industrial sectors, and you've got to find a way to mitigate them, to decarbonize. And with that, you've got to develop new metallic supply chains that were not needed in the past. And rare earths, although you may not hear a whole lot about them in the mainstream when you hear about batteries and lithium and ion and cobalt, rare earths are as important. And you wouldn't have wind turbines, you wouldn't have electric vehicles, you wouldn't have any of the 21st century renewables and decarbonizing tech unless you had rare earth elements. Let me explain where rare earth fits, or Ucore fits into that particular message. Cautionary notes, David mentioned that. A few high-level comments, a multi-pronged strategy that Ucore has developed, and we'll hit on these points as we go through the presentation. But first off, a lot of talk about China and the control that China has, and that the key is not to decouple from China. The key is to de-risk from China, in particular when it comes to rare earth elements. And the reason that I say that is that they have a 40-year head start. There's been a long history of how China has dominated through the supply chain, starting with the resource, moving to separation, moving to metals, alloys, magnets. And because of that, you've got to de-risk from that situation. You try to decouple, you won't provide what the Western world needs. Separation to rare earth oxides, or as the Japanese like to call it, the seeds of technology, that's the real key to vertical integration. We'll show you a supply chain here in a minute, but that separation of those rare earth oxides is meant to be, or is intended to be somewhere around $46 billion by 2035. That's a huge growth. And it's based upon permanent magnets that drive all of that. And we'll talk about that here in a minute. But without that separation, you can open a mine up and you'll send product back to China. You need separation. Innovation, using the right technology, westernizing things when you look at separation, very key. The threats back in the 1990s, those that recall a history of industrial powers. Back in the 1990s, it was Japan. And Japan was going to take over all the jobs of America, and they had the industrial sector to do that. That threat today is China. We look at the top companies, top 10 in the world today. US leads the way with energy technology. That's because innovation has always been the one that leads the way. And really, we're talking about open economies and closed economies. And open economies with entrepreneurship, innovation, they get to where you need to be. And we'll talk more about Rapid SX as it applies to separation. First mover with heavy rare earth. Those of you that know the rare earth industry, there are light rare earths, there are heavy rare earths. The heavy rare earths are the really difficult ones to get. And outside of China, separating heavy rare earth does not exist, zero. And to make a permanent magnet that converts electrical energy into mechanical energy, you need heavy rare earth. So what a position to be in. You've got to get to that heavy rare earth opportunity. You've got to be a first mover, and that's where Ucore's focused, not just on separation, But let's get the heavy rare earth job done with dysprosium and terbium in order to be able to supply and take care of the needs of electric vehicle companies, wind turbine, etc. And respond to the market founded on sound economics. We've got some very deep economic models we'll talk about here, and smart pricing mechanisms. And I think I'll go out on a bit of a limb and say that when it comes to EV companies, wind energy, defense, security of supply is actually more important than the pricing itself. But when it comes to pricing, you've got to make sure it's stable. And we'll talk about that a little bit as well. And then finally, the Inflation Reduction Act that we hear a lot about from the US, billions of dollars put forth at a point in history when we're trying to develop these new energy transition technologies. With that, it's something to take advantage of. And I've never been a fan of let's rely on governments because I think that innovation is the way to get the job done at the end of the day. But when you're 40 years behind, the Inflation Reduction Act and some of the benefits that come from the government programs, certainly an important part to the solution going forward. So rare earth permanent magnets, as I mentioned earlier, they're the most efficient means of converting electrical energy to mechanical energy. And the compounded growth between now and 2035 is looking like 4 times what it is today. So 4 times multiple growth. And some of the markets that are needed for these permanent magnets, including the smartphones that you have with you today, but electric vehicles, that motor in the electric vehicle, 85, 90% plus of electric vehicles are based on rare earth permanent magnet technology. That's because that technology will take the battery and allow that battery energy to be driven the furthest. Rare earth permanent magnets allow that to happen. There's been some talk recently about Tesla and looking at other means of dropping ferrite. They're looking at ferrite. Ferrite's potential, but it actually degrades the motor. And so who knows what they're up to, but currently 90% plus of your EV motors are based on permanent magnets, and we see that continuing into the future. Wind energy, offshore wind in particular, that's expected to grow at a 4 times multiple between now and 2030. Electric vehicles, by the way, last year, 2022, in the global landscape, we had about 10.6 million electric vehicles that were produced. Of that, Tesla made about 1.5 million, and 50% of those were made in China. In fact, of those 10.6 million electric vehicles in the world last year, 2 out of 3 were made in China. So you talk about dominating a supply chain of rare earth as part of that plan forward, and not a secret. It's not like someone jumped up and said, oh wow, look what China's doing. They told us in incremental 5-year plans what they were up to. We watched it. Now we've got to catch up. And then finally, national defense. Everything from drones, missile guiding systems, robotics, you name it, all based upon permanent magnets. And you've got to have permanent magnets, again, heavy rare earth that go into permanent magnets, which allow the high temperature performance. And the growth on the national security side by 2030 is meant to be 5 times what it is today. So certainly a big market opportunity, and relying heavily on a 4 times multiple of permanent magnets between now and 2035. The rare earth outlook to 2030, just in basic numbers. When you look at the Chinese landscape, or what China has done with the industry, 60% of their resources currently in China. Separation is somewhere in the order of 85, 87% of separation to rare earth oxides happens in China. And then 90% plus of your metals and alloys and magnets are made in China. So that's the challenge. You've got to overcome that really tight position that China has created for the rest of the world. And when you look at 60% of resources being in China, it used to be more like 90% in China. But now China is reaching into the outside world and bringing resources back to China for separation and production into metals and alloys and magnets that drive these EVs, and other technologies. The opportunity, as Ucore sees it, is based upon, let's look at the 2030 market. And we talked about the 46 billion by the end of 2035, but by the end of this decade, 2030, we're looking at a $32 billion rare earth oxide market. The total addressable market, meaning which portion of that is not in China, is 15.7 billion. The goal of Ucore is to have 3 self-use rare separation facilities based on our technology, and 3 joint ventured opportunities as we continue to scour the U.S. allied rare earth feedstock outside of China. We're realizing that certain areas are where they'd rather joint venture and have separation with their in situ mine, and that too is an opportunity. But with that, the goal is to generate 3 self-use, 3 joint venture use, getting us to a goal of $3.2 billion, or 20% of that ex-China market by the end of the decade. A simple supply chain. Those of you in the rare earth space would probably know what this looks like, but essentially on the left-hand side, you have your ore in your mines, and that gets turned into a chemical concentrate through beneficiation. And the dead center of the supply chain, that's where separation happens. That's where you have a mixed rare earth concentrate, chemical concentrate, that gets separated into oxides. That's the really difficult part of the supply chain. On the far right, you have the turning that rare earth oxide into a metal, an alloy, and then eventually into a permanent magnet that goes into a wind energy application, defense, EV, you name it. So we're focused with Ucore, we're focused on that center section. And when you think about it, if you're going to open a mine up, a mine can take 7-8 years in North America, and some of those regulations have to change. That's just too long. I mean, North America's not opened a heavy rare earth mine in 70 years. That was the Molycorp mine way back when, and that still is the only rare earth mine that's up and operating. 70 years, that's a long time when you have a supply constraint the way you have currently. A couple things about the midsection. You've got a midsection of the supply chain. You've got to westernize your tech. You've got to be innovative in order to give yourself a fighting chance. And that's where our technology comes in that we'll talk about here in a minute. But the other thing is that when it comes to that separation step, when you look at gold, Dave, we talked about gold earlier. You know, if you have a gold concentrate, you've got upwards of 90% plus of the value in a gold concentrate. It's not like that in the rare earth supply chain because that middle section is so difficult. It's actually 50% of the value that comes out of separating those rare earth oxides. Again, not like gold. The Ucore objective here through self-use and joint ventured opportunities is to not toll. The objective here is not to toll. The objective is to use U.S. allied feedstocks upstream to feed into the separation plant number 1, number 2, and number 3, and feeding into customers downstream. On the upstream, we currently have 14 different dialogues going on. Some are near at hand to be able to feed our first strategic metals complex, as we call it. We've got a really good team working on that, not the least of which is Jeff Atkins. If you go to our website, you'll see Jeff, you'll see his background. He was involved with Linus early on. He was involved with developing their operations, and part of his assignment was to look at rare earth up-and-coming projects around the world. So currently, Jeff is doing that for Ucore. He joined the team in 2022, and really he's doing a lot of due diligence on different resources around the world that are U.S. friendly that we can feed into our separation plant, number 1, number 2, number 3. Downstream, you know, when you talk about your end user, let's talk about the automotive electrification of vehicles. You know, 90 million vehicles new made in the world every year. By 2030, it's anticipated to be 32 million of those 90 million. My background, mechanical engineer, I founded a tier 1 automotive company over 25 years ago, and know all the nuance of supplying to key automotive customers. Had a career of supplying to people like Stellantis and Hyundai and Kia and Toyota and Honda and Nissan and VW and Mercedes, General Motors, you name it, and understand what's required in order to get your product qualified and into the hands of a reliable supply chain for the automotive company. And again, that security of supply is really paramount to what the automotive company is looking for. So those are a couple of key points about the supply chain and where we fit in that dead center. Let's talk about the technology to get that particular assignment taken care of. Back in 2018, 2019, as Ucore realized that that separation of rare earth oxides was fundamental and key and did not exist in North America, and it was very sporadic in the rest of the world, we set out to find best-in-kind technology that could get the job done and give it a real Western fighting chance against what's known as solvent extraction, which is the only process used today to separate out rare earth oxides. It's used in China, as I mentioned earlier. 87% of that separation happens in China. We found a company called Innovation Metals Corp. We had looked at all sorts of different opportunities. We looked at different nanotechs. We looked at high pressure, high energy intensive processes. But we landed on a process known as Rapid SX. And the reason we liked the technology, or I did personally, was that it's not a leap of technological uncertainty. It's based on the same chemistry used for solvent extraction. So that's a real good foundation, a good starting point to work from. And we ended up acquiring the company in May of 2020. And for the last 3 years plus, we've invested well over $10 million. We've built a team of engineers, metallurgists, chemists to take the technology that was very robust at that time and to get it ready for commercialization. The advantages that we liked were particularly coming down to the column-based technology versus mixers and settlers that are used in solvent extraction plants. And that proprietary patent-pending column-based technology allows your throughput of the plant to be that much greater than a solvent extraction plant, which means less working inventory. It's also based upon a lot of ESG principles where you have less chemicals, less reagents, less power, less people touch time. We've got a lot of PLC controls that control the plant, commercial demo plant that you're looking at in a schematic here on the right now. And then the pictures that are kind of highlighted in the back, that's sort of inside the plant itself. It's about the size of 2 tennis courts. The columns are 16 to 18 feet high, and a real good showpiece. We had people from governments, resource companies, automotive companies come into this facility in the last year and take a look what we're up to, because this is a real good Western technology to really give what is needed in the West, which is a great head start. The OpEx is, we're finding, considerably better. The CapEx definitely better. Because of the column-based tech, you're using a much less of a footprint, somewhere in the order of 30% of the footprint of a plant, which is significant. If your capital's not sunk yet, why not give yourself a good fighting chance to get at it? A solvent extraction plant, 5,000 ton per annum. With the plant itself, you're looking at $250 to $300 million. A 5,000 ton rapid SX plant, you're looking at $55 million US numbers. So a lot of advantages that we really like with Rapid SX, the technology, and we're working to commercialize that further. We've qualified all the results. Now we're quantifying the exact metrics and what's needed to continue to advance our tech. Here's another picture of the plant itself. We've run synthetic monazite through the plant. We've run ionic clay through the plant. Ionic clay is heavy rare earth. And again, no separation of heavy earth exists outside of China. This is happening in Kingston, Ontario, where we're proving out the heavy rare earth processing using the Rapid SX technology, gathering metrics and looking to, again, plug it into a strategic metals complex that gets that vital part of the supply chain taken care of. The purpose of the plant is to qualify products for automotive companies. We've got a team of engineers and chemists and whatnot from Kingston Process Metallurgy that are working with us that are great. We've worked with them for 3 years now. We've got a team out of New England known as MetChem that have built chemical plants, and they too are part of our team going forward. And they're taking what's happening in Kingston, getting ready to plug it into the bigger plant going forward. We're running thousands of hours on the plant. As I told our engineering team, if you're going to build a commercial demo plant, don't make a couple of Bunsen burners on a top of a lab counter. Make a plant that's robust, run the heck out of it, try to break it, test everything you possibly can. That's what's needed to get into the automotive supply chain. You've got to make sure that your technology is ready for commercial prime time, and that's what's happening in Kingston right now. Along with a couple other things that are going on, there was a news release that came out today, and although people may have read it and thought, gee, that's what a boring piece of news. But you know what? The science, the engineering, and the planning to go forward to get from a commercial demo to an actual commercial plant, it's significant. And some of the things that we're working on here in this plant, analytical integration with PLC control systems and chemistry optimization, that's pretty boring. But I tell you what, PLC, analytical integration, and chemistry optimization to make sure that the technology you have is using those chemicals most efficiently to get the separations or the split stuns. That's key. On the heavy rare earth side, the reason the Chinese have had such an advantage is that typical heavy rare earth deposits are thorium-based, and they have no regulations that really worry about the radioactivity with thorium. We've got to work with those radioactive concerns in North America. Our inputs are looking to be less than 10 ppm, but currently we're monitoring, we're tracing, we're understanding as we concentrate and run our process, where does your radioactivity fall out? That's an important assignment as you move towards commercialization. We're producing small batches of oxide, which is key. We've got a techno-economic assessment going on by means of having a solvent extraction, a small solvent extraction plant, 1/30th scale, I believe is what it is, that's beside the Rapid SX column-based plant, a 52-stage plant. And we're creating a baseline with solvent extraction that we can then compare to the Rapid SX tech to make sure our metrics continue to dial in where they need to be. But again, the beauty of the chemistry being the same, it's not a technological leap of uncertainty, it's a smart westernized approach. So this work has been ongoing in Kingston. The engineering team is at it every day. They're running thousands of hours and a pretty significant path forward to get this job done that's needed in that mid-market. Let's talk about the Strategic Metals Complex. We have had a couple of announcements regarding Louisiana, one a couple of weeks ago, where we had final sign-off from the state of Louisiana on a package to help us set up in their state. But the way this happened was that back in the spring of 22, we realized that a brownfield building was needed. And the reason I say brownfield is that if you were going to build a greenfield building, you'd probably add 2 years onto your schedule of getting into market. And we didn't want to have the cost of it. We didn't want to have the time that was consumed by it. We wanted to move to first mover, getting this critical separation done. So we looked along the Gulf Coast. We looked in Texas. We looked in Louisiana. We looked in Mississippi. And quite frankly, the people with the Louisiana Economic Development, they were very forthcoming. They were very good to lay out a series of close to 20 buildings that we investigated through the state during 2022. By the end of 2022, we had arrived at 3 different buildings that we felt were the right characteristics to build a 2,000-ton plant that could be scaled up to a 5,000-ton plant. And that was the initial goal. But by the end of the day, we actually found a building in Alexandria, Louisiana, that allows us to get to 7,500 tons. That's ex-serum, ex-yttrium. So that's pretty significant. The things we liked about this particular facility, it's in a good economic area. It has a good rail access coming in. It's one-day trip, round trip from 3 large ports along the water. It's away from the water because we were certainly concerned about weather and what could happen on that particular side of things. So that was a concern that we had to deal with. And then also, looking at the industry in the area, looking at the university supports, looking at speaking with the power companies, speaking with the natural gas companies, understanding what all those inputs and supports look like going forward. So that too was very crucial as part of our decision to end up in Louisiana. So we found an 80,800 square foot building located in Alexandria, Louisiana. Here's the actual sort of an aerial view of the building. It's got a rail spur on the side of it. And we've started to engineer the internal workings of the plant. So we're doing a copy and paste. So what's happening in Kingston is really being copied and pasted into this particular building. And with that, we're looking at 3 light rare earth lines, 3 heavy rare earth lines, beginning at 2,000 ton per annum. Then without interrupting production, going to 5,000 tons. So we're laying out the building inside the building such that we can run our 2,000 ton per annum and not have to stop the building or stop the production for 4 months to allow it to expand to a 5,000 ton per annum. That's not where we're going with it. So we're laying it out in scalable modular, which is one of the beauties of Rapid SX technology. We can be scalable, modular, and grow in a way that doesn't disrupt the market, and grow into the market too. So growing into the market is very key, and that's really what we're looking at doing as well. Starting with the 2,000 ton, going to 5,000, then going to 7,500. This particular building happens to be on an old Air Force base. It's controlled by the England Air Park Authority. And one of the beauties of this, which we did not know going into it, is that it's actually in a foreign trade zone. And the significance of that is that in one of the agreements that we're redlining back and forth with one of our automotive customers, one of the requests was, if you find an operation in a foreign trade zone, that would be beneficial. Now, the reason for that is that you can bring material in from Australia, for example, South America, perhaps Western Africa. You can process it, and they can direct source it to where they'd like it to go. Meaning send it to metal maker X, Y, Z, magnet maker A, B, C, and not have to worry about the tax implications involved with processing in America and then perhaps sending it on to another country for final, deployment into the supply chain. And, currently outside of China, 85% of your alloy making, magnet making resides in Japan. The Ucore team was in Japan just a month and a half ago. In Tokyo specifically, we're meeting with a couple of Japanese industrialists talking about how they would get their supply chain nodes reconnect in the North American market. They like what we're doing in Alexandria, Louisiana. So this plant, at its full scale, will actually require about 16,000 tons of rare earth in order to process to get down to 7,500 tons of throughput at the end of the day. And again, back to the the boring engineering, if you will. The boring engineering is necessary engineering, and currently we're looking at all the eco-processing things that need to happen in that plant. We're looking at hydrochloric acid recovery and recycling loops. Again, I mentioned MetChem in New England, a really good chemical company. One of their specialties is acid reclaim and recycling. Ventilation fume scrubbing systems, facility upgrade designs based upon the building that we had located, creating closed loop processing, lean manufacturing. Lean manufacturing means that you don't have a whole lot of touch time involved with what you're doing. Don't move things 3 times when you can move it once. The plant layout with beginning with 3 heavy rare earth and three light rare earth lines that can be expanded to 6 to go from 2,000 ton to 5,000 ton. Design and yttrium removal systems, which are necessary in a 52-stage unit. Wastewater treatment. In fact, the only wastewater coming out of this facility will be saline water. And again, that may sound like boring engineering, but if you're going to be a first mover, you've got to engineer, you've got to be smart. And eco-processing is certainly the way to do it. And taking that building footprint and copying and pasting what we're doing in Kingston is also crucial to making this whole first mover plan come to fruition. I mentioned the Inflation Reduction Act earlier, and we've had some government support that you may have read in our news or perhaps on our website. But particularly on the government support side, a couple of things that are pointing to North American supported infrastructure. One is the $7,500 clean vehicle, electric vehicle tax credit. That $7,500 is for final assembly of an electric vehicle in America. That's a good thing. I mentioned earlier, 2 out of 3 electric vehicles in 2022 were made in China. That's got to stop. All these UAW strikes that are going on right now, you know what? Good on them. They're pushing, they're trying to get what they can get. And one of the things they're concerned about is the onset of electric vehicles and making sure that those electric vehicle jobs do remain secure here in America. And that's key. Another one, which is not passed yet, but it's certainly in a bipartisan discussion, it's the rare earth permanent magnet credit of 2023. Really, it's a mouthful of what they're calling it at this point. But it's really $30 per kilogram for a rare earth permanent magnet that actually has 90% plus of its inputs in the US. So for Ucore, being situated in Alexandria, $7,500 tax credits for EV companies assembling in North America, and that $30 per kilogram tax credit with US-based inputs, that's great. And that's where we want to be able to leverage our support as we look to break this grip. And again, not decouple from China, but de-risk from China. On the U.S. Department of Defense side, a couple of months ago, we were awarded a $4 million program from the U.S. Department of Defense. And essentially it was to say, hey, you've got some really good tech here, and let's see if you can process heavy rare earth outside of China. In fact, not happening, as I mentioned, anywhere outside of China. So let's get it done. Let's run thousands of hours. Let's run trials. And that $4 million is what they call an OTA, another transaction agreement. It means that more money has been appropriated, although not announced yet. And it's to continue to then look towards commercialization. We've been engaged with the IBAS team from the US DoD. They'll be coming up to Kingston this month in a couple of weeks. In fact, I believe it's next week, and taking a closer look at what we're doing. And they'd like to get to Alexandria, Louisiana as well, and take a look at the building there and see the commercial full-scale plan going forward. So that support from the U.S. government is certainly paramount, and it helps to, again, move forward and get this job done. The state of Louisiana has been fantastic. They've currently put forth $15 million in incentives that allow us to work in that state comfortably, and various payroll incentives and whatnot. But we're looking forward to that ongoing support on the government side. So government in important roles. I stated earlier, when it comes to innovating, you should spend your time addressing markets, dealing with innovation, dealing with technology, and not lobbying government. But these programs are available, and it's not like anyone's getting lazy lobbying government. We have a great group that we work with in DC, Jeff Green and Associates, and we worked with them for quite some time. They do all the heavy lifting. They find the opportunities. We work on the job of being first mover, which involves a lot of engineering and smart business to get there. Moving forward here, the economics of a strategic metals complex. And again, we're looking to build three of them. The outputs are the magnet metals originally, praseodymium, neodymium, dysprosium, terbium, the heavy ones. And on a 5,000 ton per annum based on 22 pricing, you're looking at about a $500 million top line. The EBITDA is quite substantial, 30% based on 22 pricing. And a capex for that, as I mentioned, is $55 million. To begin with a 2,000 ton per annum plant, that's a $45 million endeavor. You can get to 3,800 tons of throughput ex cerium, ex yttrium, just by running more hours on that particular plant. And then again, with scalable modular engineering, ramp it up to your 5,000 ton moving forward. Your source of capital to get there, currently negotiating in the offtake arena, somewhere in the order of 20 to 30 million in offtakes. Those are pre-purchase supply agreements wherein you would receive your money before kilogram number one is sold, and then the customer, automotive, consumer electronic, DoD, would receive a discount on product for 5 years and another discount for subsequent 5 years, making their investment quite healthy and giving them the security of supply that they're looking for. Government funding, 10 to 20 million range estimate, and then more debt equity, 10 to 25. And you can see that number, it equates to something more than 55 million, but you need a little bit of working capital there as well. And those numbers will change, and there will be announcements that come along with those particular sides of it. On the model itself, when you talk about pricing, that's a real strategic endeavor. Your pricing model, meaning the pricing that you intend to charge your customer, it can't go ex-China. It can't be following the Asian price metal index. It can't go up and down based upon COVID lockdowns, state-owned industries turning the dial down. It's got to be based on stability. And all our discussions to date about pricing have been based on stability. With an electric vehicle, for example, when a new EV comes out or any new car comes out, it's typically part of a 5-year platform. What the automotive company wants to ensure through that 5-year platform is that they've got security of supply, they've got product on spec, and they've got a price that doesn't fluctuate all over the place. So in order to do that, a smart move actually to protect the auto company and to protect the separator, Ucore, is to have a floor, have a basement in the price that says we'll never go below this point. The floor does a couple of things. It keeps the separator healthy. It also keeps the resource healthy because that floor can be passed on to the resource, the US allied one, allowing you to negotiate your price strategy effectively and create a localized or a non-Chinese price metric that allows the industry to thrive and take hold. Sliding forward here, this is the timeline. This is what we're on the first mover side of it. We're looking to get to that 2,000 ton per annum plant by Q1 of 2025, by the end of 24. So we'll be commissioning at Louisiana plant in the last part of 24, looking to produce first product by the first part of 2025. And again, those boring engineering activities I mentioned earlier, those are necessary engineering activities to allow you to get into that lead position. By early 26, we're looking to get to a 5,000 ton per annum plant, and then by 27, a 7,500 ton per annum plant. Again, ex cerium, ex yttrium, by ramping up accordingly through the scalable modular technology that we're testing and developing in Kingston currently. And this is SMC number one. SMC number two is probably going to end up in Canada. I mentioned the government support. There's been a lot of US government support, but the Canadian government has certainly noticed that this is a Canadian company with some really good tech that the US government has noticed. We need lots of rare earth separation. It does not exist. We need it. We need it to be based on best-in-kind technology. We need the economics to be sound. We need good inputs, and we need lots of this separator material as we move towards 2030 and some of those market demands that is stated at the outset of this presentation. So SMC number two will probably be in Canada. We haven't decided where yet, but the Canadian government is certainly in discussions with us about what that might look like. Our capital structure is a really tight structure. 62 million shares outstanding, fully diluted 83 million. Insider ownership, 22%, really two entities that own 22%. One is an industrialist out of Alaska that has been very supportive through the growth of Ucore's path forward. Another is a group out of Germany that they too have been super supportive, and they can see our plan forward, and they like what we're up to. So this capital structure is very tight. It allows us to take on a little bit more equity. And I know our shareholders get a little frustrated when we make further equity raise. But in the big picture, keep in mind, people, we're building 3 SMCs, 500 million top line per SMC. If you look at the current market cap of Ucore, and you look at the returns on plant number 1, the multiples are there. So the investments made today on the equity side, as required, again, we're going to look for non-dilutive financing first, government, offtake, and we'll work with equity as we need to, in particular with strategic equity. I think we're at a point now where we just don't need to go to the open markets and gather up equity, but strategic equity, those that can help us further as we develop in this strategic plan, multi-pronged approach is very key. A couple of near-term milestones everyone's always excited to hear about. We do have several groups that we're working with now, by the way. We want to get our news flow a little more robust. Red Cloud is certainly one of them, and we appreciate what we've been able to do with this webinar. And they'll continue to promote our story and the way we're moving forward. We have a couple other groups that are involved also. And again, we hope to get more traction telling the markets what we're up to. Some of the near-term milestones, Kingston demo plant. Very shortly, you'll hear about some of those qualified products coming out of the Kingston plant. Additional Canadian and U.S. government support on top of the $4 million U.S. that I mentioned, or the state support. We anticipate more government support coming forward. Secure supply agreements. I mentioned 14 sources that we're working with, but 3 are really close at hand. We're looking to have that secure supply arrangement buttoned up and tell our shareholders what we're up to. Finalized offtake agreements. So, working with the downstream customers, and we currently have a multiple of EV companies or companies are involved with making EVs that we're in discussion with at various stages. We're looking at a consumer electronics and discussing with the consumer electronic company. DoD is certainly part of our discussion as well, given that they funded us and they're looking for secure supply to make sure that they've got what they need for their missiles and their drones and all of those heavy guided systems that they have to protect North America. And finally, the Louisiana engineering, procurement, construction contractor integrating with our production engineering updates. The production engineering team, Orbital. They've built energy plants. They've built infrastructure around America. They're a really robust group, and we're working with them. You'll hear more about the integration of plans going forward with our near-term news. Again, Red Cloud being a part of that messaging going forward. And then finally, just a summary, which sort of ties back to the comment I made at the outset, which was our first mover multi-pronged strategy. We're currently operating a commercial demo plant in Kingston, Ontario, Canada. We're working with heavy rare earth. That's not happening anywhere, to our knowledge, outside of China. We're working thousands of hours in order to develop that so we can plug that into a commercial demo plant and move forward. The commercial demo plant, number 1, or the commercialization plant, number 1, is not a mystery. It's in Alexandria, Louisiana. We've got a building, we're engineering, we're working with it, and we're deploying our Rapid SX technology in that particular plant. We love the technology because of its simplicity relative to not a technological uncertainty leap. It's based on the same chemistry. The chemistry has been proven over years. The application of the chemistry is that much more efficient. We have a great team with Kingston Process Metallurgy, with MetChem, working on making all of that happen. And we're establishing essentially North America's critical separation, which is needed. You can develop your mines, you need separation. You can develop your metal, you need rare earth oxides. You can develop your magnets, you need metals. You're in that key point of the supply chain where we believe, again, permitting in months, not years and years and years, and crucial to doing what needs to be done for North America right now. And engaged with multiple discussions with up and coming projects around the world, doing our due diligence on them, U.S. allied feedstocks, and making sure they plug into this crucial part of the supply chain. So that's our story. That's our business overview. And Dave, I guess I'll turn it back to you, and we can take a few questions.
Yeah, perfect. Thank you very much, Patrick. It was a very informative presentation. You covered a lot of material there. So we're now going to kick off our Q&A portion of the webinar. Reminder everybody online that you can type your questions into the chat box. We'll get to as many as we can, but we already have quite a few of them. So I guess, Pat, first off, why don't you give us some context as why is Ucore focusing on rare earth elements to begin with, and why is it important that North America try to insert itself into this supply chain?
Yeah, that's a great question. You know, when you hear about electrification these days, you hear about lithium and all the lithium that's required. And you hear about the cobalt that's required. And you hear about the nickel that's required. And you hear about all the things that are needed for the battery. And that battery, you know, the prices will improve in that electric vehicle battery. I think today, you know, $8,000, $9,000, $10,000. That's a lot. The average MSRP for an electric vehicle last month, I believe, was $65,000. I think I believe I heard the stat that you've got to work 42 weeks of family income in order to afford, that particular vehicle. That's pretty substantial. But the actual, the rare earth side of it, in the motor, the electric motor and the permanent magnets, that's depending on whether it's all-wheel drive or not, that's a $250 to $350 impact on that vehicle. But the key is, if you don't have that $250 to $350, you don't have an electric vehicle, because you don't have the permanent magnets that draw it and make that battery go where it needs to go. The beauty of the technology, Rapid SX, is that it can be used anywhere where solvent extraction is used. But if you're going to get the most use out of it, go to where the most difficult, most critical minerals reside. For example, you could use Rapid SX in a copper industry, well established. People with big paychecks, and they might look at their plant and go, hey, we can plug it in on this section of our plant, another section of our plant, and get some fortitude out of the copper plant. But rare earth, the need to recreate that supply chain, the need to have the independence that will take those 2 out of 3 electric vehicles being made in China right now and swing that pendulum back to America. You need the rare earth. The opportunity is now, as I stated earlier, according to Adamus, by 2035, look at a $46 billion rare earth oxide market. Why wouldn't you put your energy, your tough engineering, your innovation, all your fortitude into getting that job done? So that's the why of it, and not the least of which is national defense. We're vulnerable right now, and we need to make sure that we fix that.
Okay, so we'll come back to the process in just a moment, but you did mention the rare earths fit into the EV sector, wind turbines, and so on. What are the ultimate? Who are the ultimate customers for rare earths, and do you have any agreements secured with any of the OEMs, or are you moving along that path at this moment?
Yeah, it's a great question about the ultimate customer. So some might look at it and go, well, according to the supply chain, your ultimate customer is the metal alloy maker. But back in the tier 1 automotive world today, which is where I come from, if an automotive company wants anything from a dashboard to a transmission to a you name it, they go to a tier 1 and they get it. With the EV advent, the new metallic supply chains, it's like the days of Henry Ford, where he had to invest in rubber plants, he had to invest in iron ore, he had to invest in different things that would ensure that his vehicles could be made. And that's what's happening today. What's happening today is that the customer, the automotive company, needs to have separated oxides to then direct source to a metal maker, direct source to a magnet maker of their choosing. But they will take title and be a customer at the separation plant, number 1, which is, again, destined for Alexandria, Louisiana. So that's who the customer becomes, or the wind energy company, or the defense contractor that wants that rare earth oxide.
Mm-hmm. And what sort of pricing strategy do you think will work here? You mentioned the use of floors in your talk. Is this something different that OEMs will need to adopt, and will it provide you enough protection should prices drop?
Well, to go back to your previous question, we're in discussions with several automotive companies, and certainly as part of the discussion for a pre-purchase supply agreement, it's the pricing model. So in the pricing model, if you decide, well, hey, let's just follow the Asian price index, which is the only one that exists right now. Well, the vulnerability of that is that should the state-owned enterprise decide to drive prices down, drive prices up, it's really a yo-yo effect. So you're much better off finding what's the cost of producing the product, what's the fair markup on the product. And you certainly use the index because you can't be off point, but put a floor in there. And the floor, again, as I mentioned earlier, is something that protects the automotive company, protects the resource company, protects the separator. And so we're looking at a ceiling and a floor in order to achieve the pricing that gives the automotive company what they want. And again, they want security of supply, number one, don't run out. They want product on spec, yes. And they want pricing that is not up and down, but pretty consistent through the life of the vehicle.
Mm-hmm. You've been working on your proprietary rapid SX process on separation for probably 3 years now. The goal to achieve the same purity recovery for as a conventional sulfide SX plant, but aims to decrease processing time. What part of the processing, the separation processing, is really faster with the Rapid SX? Is it a speed up from the beginning to the end of the entire process, or including maintenance over the course of a year?
Yeah, it's the column-based technology itself. So it's the application of the chemistry through the column-based technology. So, if from the start of a plant to the end of a plant in a solvent extraction plant, if that's a 30-day, 45-day event, in a Rapid SX plant, you're really looking at days. And that means a couple of things. One, it's quick to market for customers that require product, the metal alloy maker, of course, the magnet maker. It also means less work in process inventory. You're cutting your inventories down, which is substantial as well. So, what's the secret to make it happen? No, it's not in the maintenance. In fact, the people touch time, because all of our proprietary column-based tech and the chemistry is all controlled with PLCs and pumps and whatnot. All of that, is dialed in quite finely, and it's got nothing to do with maintenance or inbound operations or outbound operations. It's the actual separation, the application of chemistry, less chemicals, less reagents, as I stated. Less power, less people touch time, more PLCs, more westernized tech approach. Don't make big, cumbersome, slow football fields full of solvent extraction plants. Certainly don't do what's happening in China now with a lot of dumping and destructive environmental practices that you would never do in North America or Europe. But westernize, make it faster, make the throughput better.
Right. Okay, and you use the term proving out. And now one viewer asks, what does proving out mean? Does it mean that RSX is actually separated and working right now? And I guess what steps remain to be completed at the demo plant in Kingston to prove this?
Yeah, that's a great question. In fact, the prove out, and maybe I did use the word prove out, but all the benefits of Rapid SX have been qualified, meaning the faster throughput, the less chemicals, the less reagents, the less power, all the things that give you separated product to spec that you stated, all of that's been proven. All of that's been independently evaluated. We had an independent evaluator come in on a couple of fronts to take a look at what we're doing. You take your own measurements, you take your own time studies, you take your own throughputs, and determine that we've got actually what we're measuring and seeing. And so we've done all that. So the qualifying of all the benefits are there. From an engineering world, now you've got to quantify it. So now quantify means put a number and a metric to. So exactly, is it 6.5 times faster or 7.3 times faster, depending on the feedstock coming in? And so all those quantified deliverables are what we're working on right now. But the technology, its robustness, what it delivers, it's there. The technology is fantastic. The quantified approach, so we can effectively build our commercial demo plant, our commercial plant in Alexandria, Louisiana, that's where the quantification comes in.
Great. R&D costs money, and you've gone through about 3 years of this quote-unquote boring engineering work, as you called it. Now you're approaching scaling up a plant in Louisiana, which will take more capital as well. Can you elaborate a little bit more on how you plan to secure this funding for your SMC plant in a way that maybe minimizes dilution or impact to your share structure, and when might you need this funding? Yeah,
so there was a slide on that earlier in the deck. But first to the activity, the engineering activity. So currently, the program we received an award from the DoD is fantastic, because that $4 million US actually pays the bills for people working in Kingston doing what they're doing. We're running ionic clay feedstock currently. It's heavy rare earth in nature. As I mentioned earlier, we have run the synthetic monazite through. We're going to run bastnasite through. But the bills, so to speak, to develop an R&D, and it's not R&D, it's commercializing. We're commercializing, so that those commercializing dollars are in place by virtue of the U.S. program, number one. I mentioned that the Canadian government's highly interested in what we're doing, and look at a near-term driver where the Canadian government will look at this Canadian company and go, wow, you guys are on point. And so again, more funding to be able to take care of those engineering efforts. Now, the bigger plan to get to the plant itself, let's talk about the 5,000 ton per annum plant. 55 million is the raw capex to have all the incoming, the rapid SX technology, and the outbound activity. That's the full stream, the full gamut of what goes in that building in Alexandria. So with that 55 million, if you're looking at, again, ranges, 20 to 30 million in automotive offtake, that's not an equity investment. And I say automotive, but we're dealing with a consumer electronics company and one other company that's not automotive that would want some of our product. We had one customer say, we'll take everything you can provide. And our strategic whiteboard said, no, we're not doing that. We're not going to be beholden to one customer, nor will we be beholden to any one resource. We have multiple resources that are aligning. We have multiple customers aligning. So offtake is anti-dilutive. Further government funding on top of the funding that will fund the R&D per the question, or commercializing as I like to call it, that funding is in the range of 10 to 20 million. Could be more. By the time the DOD gets to Alexandria and they have a look at the facility to see what we're doing, could be more. The technology, what we're doing in Kingston is again, on point, fantastic. Let's plug it in, let's move quick. That's what America needs. So government funding is grant money. It's not equity. It's not dilutive. And then finally, from an equity standpoint, yeah, we'll probably need another equity raise. But in the bigger scheme, keep in mind that further equity is not going to be a huge hit. In fact, you've got to look at the share price today and figure that we've got multiples and multiples of gain here based upon where we are and what we're doing. And that gain based upon small investments today, that will pay off in spades to all our current shareholders or new shareholders looking to come on board today. Mm-hmm.
Is that multiple resources aligning? So, and I also think I heard you say there's a preference for heavy rare earths based on the attributes of the process. So will this be dependent on the feedstock you obtain? Do you think you can target specific feedstocks? You know, how available are these feedstocks?
Yeah, absolutely. I mean, you can't process heavy rare earth unless you have the heavy rare earth concentrate coming in. And so we have identified one source near at hand that there'll be news flowing about it in the upcoming months. And that heavy rare earth feedstock will feed into our Louisiana plant, starting with 900 ton per annum of heavy and another 1,600 ton per annum of light. We have several sources of light rare earth as well. And again, in these 14 sources that I mentioned, you know, there are 3 that are near at hand to fund or to fuel and to provide inputs for the plant at the outset. Then we have others that are different stage of development. And then we have others that we just have looked at and said, no, they're not going to make it. They're not in the 14. The 14 are those that we believe have a fighting chance. They've got good people. They've got a good deposit. They've got a good plan for it. They've got some capital, because capital is important. And we're looking at that from a real critical eye. And again, Jeff Atkins, who was one of the original people that worked with Linus, one of his assignments was to look around the globe and find those deposits and understand, do they have a fighting chance? We want to do our due diligence to make sure they have a fighting chance and they can, fund and fuel our needs going forward. Fund, not the word, but certainly fuel our supply going forward.
Mm-hmm. Okay. Could you please comment on the line of products you plan to produce in addition to the rare earth oxides? So the release today, I think, mentioned precipitation of chlorides and oxalates in addition to those oxides.
Yeah. So, we're focused on the magnet metals originally. And those are the ones that work into the permanent magnets. But there are other rare earths that are out there. They're in the portfolio. One of the slides identified it. There's a couple there that go into example, modified armor, high strength armor. There are others that go into water treatment. There are other catalyst industries, and we've spoken with a couple of distributors or people that know that market quite well. So as we develop our portfolio, obviously you want to use the entirety of your input resource. Yes, permanent magnets, but you also want to be able to develop and work with your entire basket to give you the full reward that you want going forward, or the full economic benefit going forward.
Right. Okay. Couple more questions since we're almost on the top of the hour here. Could you talk a little bit more about the pending patent approval and the expected impact to your business?
Yeah, we originally we had filed back in 2020 a provisional patent based on everything we knew about the technology at that point in time. And then as the year went on, there were a lot of additional things that came to light. And then as time went on beyond that, we really had made some significant gains in our IP that the team really dialed into some things that we did not expect. And so we filed a very fulsome patent application earlier this year. It captured everything that we had learned the last couple of years, including what the original founders of Innovation Metals Corp had there in IP. So that was all very beneficial to the final application that went forward. And now we're in the process of waiting till some point in 2024 when we actually will be able to publish what it is that the claims are that we've been able to hold near and dear. Now, I've had a career in the automotive industry, and I've been involved with building industrial plants that have delivered hundreds of millions of dollars to automotive customers. And I got to tell you, when it comes to process patents, you got to be careful, because a process patent, unless you can see that result in the end product, then you're going to be in trouble. So you've got to make sure that you file your IP such that trade secrets and IP become the processing norm going forward. And that's really what we've done. We've done a great job of taking all kinds of trade secret activity coupled with IP that's robust, so that at the end of the day, you've got a really good filing that protects you going forward. And quite frankly, I've stated all the time that IP is great. And you're a technology company. Ucore is not a resource company. They're a technology company. You've got to have IP, but really in this market, you've got to be first mover. So just move quick and get your, not to be too altruistic about it, but markets don't buy anything. Customers buy things. And that timeline that we showed you in the presentation, that's based upon what customers need, what products by when, and reverse engineer your plant to make sure you can deliver what the customers need. So yeah, the IP, very full, doesn't give the secret away. Move quick, be first mover. That's objective number one.
Right. Okay. Timing on some of your funding here. Have you drawn down the $4 million from the DoD and the Louisiana state funding? I'm assuming that doesn't come until after the plant is built.
Yeah, and in fact, the $4 million from the DoD, we haven't drawn down on that yet either. We haven't. Yeah, Louisiana is when the plant actually is up and running, and the $4 million from DoD we've not drawn down yet. It's a very careful program of executing and reporting on a quarterly basis what we're up to, and but we will, because we're looking to pick up some of that commercialization activity, and that's happening soon. In fact, DoD, as I mentioned, they're arriving in Kingston this month, and part of that is to kick off some of what we're doing, and money will flow at that point. And we're looking at, again, it's an OTA, another transaction agreement. It's open-ended. That's the beauty of that award. And some of our shareholders may not have picked up on that when it came out, but that's crucial to a long-term relationship with the DoD as we continue to hit milestones of success, to be able to add on and be anti-dilutive. I mean, it's just a real great thing going forward.
Okay. And we have a few questions as to the status of your own rare earth element project in Alaska. So where does that stand right now?
Yeah, the rare earth project in Alaska, we're currently doing some work on it just to get it up to an updated PEA level. That's being done by a group in Colorado. Name escapes me, but that's to bring the model back up to where it needs to be. It is a heavy rare earth deposit. At one time it was the heaviest grade rare earth in the U.S. I believe that's still the case. The long game is to have that deposit developed. And again, it takes time to permit and get things up and running. And as we looked at that Alaskan project, great project, but it will take 6-7 more years to get it to where it needs to be to deliver heavy rare earth. So it becomes a good resource. But the bigger whiteboard plan going forward is take that Alaskan deposit, find perhaps another deposit or two that can fit into a resource feedstock for our separation plants. So almost like I don't want to say we're breaking up the mothership, because we're not, but the ability to have a resource feedstock company that feeds a separation company is really smart business. So Alaska remains part of our long-term plan. But to get to revenue, and that's where my career has been, get to revenue, do the most important thing, get to separation, use allied friendly feedstocks now and get that job done.
Great. Okay. And to close off here, I know you closed your own presentation on some of the expected milestones, but maybe just remind investors what they should really be watching for from the company over the next couple of quarters.
Yeah, sure. So again, back to, we talked about the offtakes, and so I anticipate that the offtake news will come forward. Secure and resource for the plant. Again, discussions have been going on for quite some time, and we're fine-lining that side of the agreements as well, so expect something there. Further government support. When that bid came out with the DoD, that went to probably a dozen companies to find the most innovative approach to process heavy rare earth, and we, a Canadian company, won the award. Think about it. We're a Canadian company. We received U.S. funding. The Canadian government was a little flat-footed. So further government funding will be part of our news flow going forward. Product to spec, being made to spec, qualified product to spec for automotive companies out of our Kingston plant. That plant can run 80 ton per annum. Doesn't sound like a whole lot, but of any rare earth separation happening in North America right now, and certainly heavy rare earth is a first mover. So qualified product is certainly key. And again, the construction plans going forward, and some of the engineering. I talk about the boring engineering, and I'm a mechanical engineer. I love the business of what we're doing, but that boring stuff gets the job done at the end of the day. And we're not a PowerPoint company. We're a get shit done company, and that's what we're up to. So expect news on that as well.
Perfect. Okay, Pat Ryan from Ucore Rare Metals. Thank you very much for joining us today.
Yeah, appreciate the time. Thank you.
Okay, thank you everybody else for tuning in. Our next webinar is going to be coming on Tuesday, October 10th at 2 p.m. Eastern, and that's when Taylor sits down with Kuya Silver. So have a great day, everyone. Thank you for supporting Red Cloud's webinar series.